Hello, everybody. Welcome to another episode of FinTech Tech Uncovered, Finextra's Tech Uncovered. Today I'm joined by Stephen Curran. Hi, Stephen. How are you?
Hey, Andrew. How you doing?
Not bad, not bad. So today we're
Good.
going to talk about a real passion of mine, so digital identity. And Stephen, you give us a quick introduction about yourself.
Okay. I started in with digital identity and what we're going to talk about, self-sovereign identity, in roughly 2017. Joined in. I have a history of application delivery and work, and for the last number of years in government, primarily as a consultant to government or as a vendor to government, not a government employee, but worked in a number of fields. Worked in Washington D.C. and in municipal governments. In the 2010, 2011, moved over to work in moved to Victoria, British Columbia, and worked in the government, or working with the government of British Columbia, and transitioned to digital identity and joined a team then. There we ran into the self-sovereign identity movement and Sovrin Foundation, the Hyperledger Indie project, which was beginning back then, and have carried on with that. So my role on the team I'm in with British Columbia government and is a community technical architect and community leader in the space. So I do a lot of work in Hyperledger, in the diff community, and the trust over IP community, and then have been working with Sovrin Foundation for a number of years. Most recently have been on the board of trustees, and currently I'm the chair of the board of trustees. So, and also play a role in the technical governance of the Sovrin Foundation. So everything to do with these things, these topics.
So let's just step back a bit, Stephen. So a number of our viewers will be maybe aware of self-sovereign identity, but
yeah.
Let's hear it from you. What do you think? What what is SSI?
Yeah, so the idea of SSI is that your identity, your digital identity, is something that you control. And so early things are just in the SSI space was a thing called was an identifier for yourself. So rather than you getting an identifier from Facebook or you getting an identifier from the government, your national ID, national identifier, you would create your own identifier, you would publish it in some way, and then you could share it and show that you control that ID. So that decentralized identifier that you might create for yourself would have a private public key pair associated with it. And so when necessary, you would publish the public key, and you would then be able to demonstrate that you have the private key behind that. And so that's part of it. Obviously, mere citizens, mere humans, non-techie people having their own private key and managing their own private key and showing control over that's really difficult. PGP tried to do that, and that's where a lot of the ideas came from, but it's really hard for people to do it. So the evolution of that is that are verifiable credentials, and verifiable credentials are credentials issued to you by whoever controls the information in it, and then once you have them, you can use them independent of the issuer. So the idea is that the government, for instance, can give you a person identifier or credential that has much of the same information as on, for example, your driver's license or an identity card from the government, but you can use it independent of them. And that's the real thing we're trying to do, which is try to, and we're going to talk about, we should talk about, reasons for that, but to prevent tracking of what you're doing. The government doesn't need to know that you walked into an establishment that allows purchasing of age-restricted goods and you showed your age. When you do that with paper, the government doesn't know you did that. There's no reason that when you do it with digital technologies, that they have to know about that either. And that's the whole idea of it. The common way of doing that with digital ID today is log in by Facebook.
Platform driven.
You exactly, you have some information about you that Facebook has. You say, I'm logging into this other site with Facebook. And what's actually happening is you're not giving your Facebook information to them in some trusted way. You are giving them authority to go connect with Facebook and get that information. And that means Facebook has the ability to track exactly what you've done. They know, the time and the service that you're connecting to. And so they're collecting that information. And that's what we want to eliminate. We don't want Facebook doing it. We don't want the government doing it. We don't want anyone doing it. We want you to be able to have credentials that you hold, and that when you share them, you share them independent of who issued to them. And it goes well beyond, the idea of it is allowing it to go beyond just your driver's license information or your national ID information, but rather professional credentials. You're a lawyer. And so today in British Columbia, we have a program where the Law Society of British Columbia, who is the authority in legislation, who's a lawyer, is able to issue a credential to a lawyer that says they are a practicing lawyer. And so they can present that. Doctors, real estate agents, you can go on to all sorts of things like that. You then get into the same sort of thing at the organizational level. A business license, the registration of the business can get a credential about that. The fact that they have a building permit on a certain place, that they have a restaurant license, that they have a license to sell alcohol. All of those things are credentials that can be held digitally and then presented independent of the issuer. So that's a long explanation. Hopefully that helped.
No, it's really good, really good. And just go back a little bit, you're talking about Facebook and those sort of platforms.
Yeah.
A lot of them have, in my opinion, a vested interest in trying to control digital identity infrastructure, right? And
yeah,
across financial services right now, we're seeing a lot of banks thinking they have a real key role to play.
yes.
Many see that identity as a way of monetizing the investment they've had to put into things like PSD2 compliance and an open banking, basically by saying you can access this person's data by paying me a fee, sort of thing, right?
Yeah.
Why a lot of SSI implementations and the Sovrin Foundation is very much blockchain based. So why the blockchain?
Yeah, so the blockchain piece is there to allow for robustness and longevity. So the two things. So one of the things I like to, whenever we bring up, excuse me, identity and blockchain, is first of all that the credential you have does not go on the blockchain. So that when you get a credential from a government, or you get a credential from the Law Society, your credential isn't going on the blockchain so that people can see it. What's happening is that's going peer-to-peer between you and the issuing authority. What's going on the blockchain are keys, public information from the issuer, so that when you do share your information to another party, to a verifier, the verifier can go to some place independent of the issuer to get that information so they can verify the credential you're passing. So the issuer gives you something that is signed cryptographically using their private keys. You then share it with the verifier, and the verifier can go to the blockchain, can go to some other source of information to get the necessary information, the public information need to verify those signatures, verify that the issuer issued it and that it hasn't been tampered with, you didn't adjust it. And that's where the blockchain comes in. Now, important parts of that are, too, when the issuer puts something out there, they could publish it on their own website, but if they go out of business or they update their website to change things around, that could make your credential unusable. You couldn't use it anymore because the public keys are no longer available. So by putting it on a blockchain, it takes it out of the issuer's hands, so that if the issuer goes away, that doesn't matter. The information they publish to make your credential useful still remains. As the blockchain will continue over time, so even as those operating the blockchain come and go, node operators, if you will, or whoever, the blockchain itself remains. And there's attributes of the credential, or the information they published is immutable. They can't change it later. They can't, if they're hosting it on their website, they could just simply update the public keys, basically removing the old ones, and now again your credential is no good. So the idea of the blockchain is the robustness, the availability, so that it's always available, and then third, that it's immutable. The information they put there is immutable, so it's always available to you. So your credential could last, years and years, a generation, and still be accessible and verifiable.
And in financial services, right, we have a big play around singular points of failure. And when you talk about private public keys, I think straight away about public key infrastructure, which we all know is how you pretty much access the web now, or how we access any secure website. But that is a singular point of failure, right? Because I'm dependent on, just as you just said, the company who is hosting your credential key, the public key. I'm dependent on a third party that's doing that. So you're really removing that central point of failure. Stephen, with the blockchain, is it also to make sure there isn't malicious actors, right?
Yeah. So one of the things that inherently are built into blockchains, and part of it is this idea that you are also looking for malicious actors in various ways they can do it. So with Sovrin, with the technology it uses, first of all, those that operate the nodes are permissioned. They go through a process to, a legal process, an identification process before they are accepted and allowed to participate, first of all. And then all of them operate in a way to monitor one another to make sure that they're available for you, so that there's detection of, hey, that node's not available right now. But as well, there's detection of attempts at maliciousness. So basically, all of the nodes are collaborating to decide what gets written to the blockchain. And when one of the parties or several of the parties are detected to be trying to write things that are inappropriate, that don't match what the others think should be written, they get blocked out of continuing to be part of the consensus. So a malicious actor, if you infiltrate, if a hacker infiltrates one of the nodes, they can't affect the entire network. The network will detect that they're being malicious and get rid of them.
And one of the things when, especially in financial services, and this might be because in financial services, a lot of people talk about blockchain in relation to transactions or ledgers of transactions, right?
Yeah.
One of the things that often gets levied is that, okay, SSI, if it's using a decentralized blockchain, is unable to scale to meet the demands of, the masses of people that's there.
Right.
I mean, I know that's wrong, right? So if you talk us through a couple of use cases of why that's wrong, but the peer-to-peer nature of that, if you can just cover that, and the fact that actually, if it's peer-to-peer, it is truly private, right? So not only is it a scalable solution, but it's private. Talk us through why is it scalable?
So suppose you've got your bank is offering you a credential that says you are a customer of that bank, and you have bank account with a certain value to it that you can then share with other people, like investors or something like that. That information that the bank is sharing with you is peer-to-peer. Is they're giving you that information signed by them so that you can use it with peer-to-peer with others. So that information, the information about you in the credential, that's strictly peer-to-peer. And they can do that with as many of their customers as they want. The information that is public that goes on the blockchain is simply the key that they used in signing that credential. To issue that on, for example, the Sovrin network, that's 3 transactions total. 2 if they're using a common schema that other banks are using. So it might even be just 2 credentials. And no matter how many customers that bank has, millions of customers, they're still using those 2 transactions. The verifiers can retrieve those off the blockchain once, cache it, and so whenever a person comes in and uses that that bank's issued credential, they don't need to go back to the blockchain. They can just use it. Likewise, the holders get it once, and then they just hold on to it to verify that the issuer provided them a valid credential. That's it. So the number of times you go at it. So in one of the use cases in British Columbia we've issued upwards of 5 million credentials, all off, literally 3 transactions on the Sovrin network, and that's it.
So in my mind, when people talk about scalability of systems, peer-to-peer, point-to-point, you can't scale better than that, right? Because it's all dependent on one-to-one. There's not a bottleneck or anything because it's just between the two of us. So, I think a lot of things have got to be said about it. But also the peer-to-peer nature around that means it's very private. To your point earlier on, nothing's written onto the blockchain that's sensitive. So when I think about privacy and legislation across Europe like GDPR and the right to be forgotten, actually a self-sovereign implementation is aiding that sort of compliance, right? It's making life easier.
Yeah, absolutely. That, is the core of it, is why we want to do it this way. We want to take the pressure off, making sure that individual companies keep their data up to date, never delete it, and always enable us to use it by putting it out into a public place, but one that's operated as a utility for the good of everybody, and makes that available.
So you just said utility, and that's a key word, right? Because we're conscious that big companies want to own identity infrastructure. If they're becoming aware that they don't necessarily or shouldn't necessarily be in the flow of data, they're starting to say, well, actually, if I own the underlying infrastructure, I still get access to that data. Right? So why is it a sovereign foundation? And what's the role of the stewards in that foundation?
Yeah, so the super interesting thing about, a blockchain is, whenever you see something about a private blockchain or a blockchain that's operated by one company or something like that, red flags. A blockchain is intended to be distributed across. And so what you need is agreements across those of what they're going to do. And so it truly is a utility. It's not for the benefit of some central organization like the Sovrin Foundation to operate it. It is there as a structure so that all of the participants have equal say into how it operates and who benefits from it and things like that. You really want to have, you don't want a Facebook controlling that type of infrastructure, that type of utility. It gets into dangerous ways. The governments can participate in that, and governments might do that because they're legislatively required to provide services like that. Roads, the internet, and so on. But these types of things you really want as a utility that is clear and transparently operated. And so you don't want a central authority operating it.
Yeah. So one more thing around the blockchain itself. We talked about scalability, we talked about the ownership. The stewards are they're the companies that operate the nodes, right? As a community.
Yeah. So what we're looking for example, in the stewards in Sovrin, is we want diversity of the stewards, diversity of the jurisdictions they operate in. We don't want to have a jurisdiction lean on the Sovrin stewards and take them offline, for example, because they're all in one jurisdiction. But by distributing them globally across jurisdictions, we're resilient to that. Technically, we don't want all of our stewards on Amazon. If Amazon either has outages or has policies they change, we don't want all of the stewards to be affected by that. So we want them diverse, either running their own nodes, running them on Amazon and Azure and on Google and on DigitalOcean and so on. So we've got a diversity there. And then we also, the other attributes we look for in the Sovrin Foundation is making sure that we're doing things like making sure that the stewards are responsive, that they're, when their node goes out, they respond quickly, that their node doesn't go out very often, that we have updates we want them to know about, we want them to communicate. So those are the things we look for in in stewards and making sure that the stewards are following through on their, their legal and technical requirements for operating. So we look for that diversity and make sure that in as we make decisions on who becomes stewards and what networks they operate on, we make sure we have those attributes.
And an identity infrastructure, as it grows and more people are adopting this self-sovereign identity model, it becomes critical. It's critical. So this level of resilience. Well, if you think every single company may be utilizing some sort of self-sovereign identity in the future, it needs to be 100% resilient. The peer-to-peer nature obviously removes the dependency from the blockchain, but even those times when I need to go and get the keys, the fact that that blockchain is then distributed and the sovereign foundation is thinking about how is that made resilient all the times, leads to fabulous uptime, right? So what's the actual uptime for Sovrin?
Yeah, so Sovrin's been operating for 6 years. The last outage, which was related to doing an upgrade, happened in 2020, February of 2020. So we've just come over 3 years of 100% uptime. And 100% uptime simply means that at all times in that 3 years, you could write to the ledger at any time and you could read from the ledger. So that's the kind of resiliency we're looking for. The other thing about being a utility is you want support for evolving the technology. So there are, it's not perfect, and we need to. That is the big thing we want to be able to do in Sovrin, is as a community fund evolution of the technology to make sure it's staying up, that it's staying up with the scaling that it needs to do, that it has things that can support all of the the different needs that people have for it. But the thing I've found is that what was implemented back 6 years ago and evolved over that time has really stayed up with what's needed. It absolutely can, that uptime shows it that it is meeting the needs that it was intended to do.
And there's two takeaways I take. There's two takeaways I take from that. There's a couple of takeaways I take from that. So the first one is obviously that we've seen community-based projects or when there's a community of people involved in actually technology and engineering it moves faster, considerably more faster, and becomes more robust. And we've even seen big players like take Microsoft with Kubernetes, right? They started to get involved with that open source community. So I think the community is always allowing you to drive forward that. But when I think of financial services, we make a big deal about resilience and uptime, and there's parties there. We talk about 99.9% upside or 99.99% uptime, and then financial services plays around with that, saying, well, it's 5 nines, but we're not available on Saturday because we do our upgrades, and we're not available at some point. We're talking 100% uptime for 3 years, including the upgrades, including new nodes coming on the network, including some stewards moving out and leaving, all of that. You're maintaining the plane in flight.
Yes, exactly. Yeah, that is 365 days a year, 7 days a week, 24 hours a day, every day. For that entire period.
And that's what we need, right? That's what we need when we talk about identity. It's just before we finish, I know we've got a second session scheduled between the two of us. Yeah. We're going to talk a little bit more around the underlying technology, specifically around something called anon creds, because I think you and I would agree that they're probably the de facto credential that should be out there. But before we do that, let's just go back a bit. So one of the things about that you mentioned around the scalability was that it's 3 transactions or 2 transactions written to the ledger, and then it's used. Now, I know your favorite point is revocation. So I know you wanted to get that in. So let's just talk that briefly.
That is the place where scalability is the biggest risk right now, and the biggest thing we want to see addressed. Sovrin and the mechanisms we use, the anon creds that you mentioned that we'll talk more about, has revocation built in and does it in a very good and safe way, privacy preserving way. But it doesn't. It is the place where the most interactions happen with the ledger. When an issuer decides to revoke a set of credentials, they might do it once a day, they might do it once a week, but they have to write a transaction to the ledger. when a person that has a credential needs to, generate a presentation to give to a verifier to say, hey, here's the credential I've got, and you can verify it. When it's revocable, they have to retrieve the data that the issuer wrote from the ledger and construct that a proof that their credential is not revoked. And likewise, a verifier, when they receive such a credential, they have to retrieve the record that the holder used off the ledger to get it. So there's more transactions involved when revocation is involved. And that's where one of the places where I'd love to see evolution of the network. I'm constantly saying, let's get, there are some techniques we know of that we could implement, and I'd really like to see projects, a project come around, centered possibly around Sovrin doing it, to scale up the revocation. Those operations that I mentioned still have to happen, but they can be much more lighter weight. And that's what I think we need. Revocation is so important for credentials.
Yeah, and there's a couple of things there, right? So I think when I think of identity, I think of me as a person, right? So there's credentials that will be issued to me that don't need to be revoked, right? And I think there's we can think of a load of examples, right? But your point is that there'll be some that will need to be revoked. Go back to your law society example.
The law society, a lawyer is practicing, then they retire or they become disciplined. You want to be able to say, hey, that credential, that lawyer's credential is revoked. And so if they go to try to use it again, it will not verify. It will be shown as revoked. And again, independent of the issuer, you don't want to go back to the issuer. You don't want to have the verifier say, hey, I got Steven's credential. Is he still a lawyer? You want that to all happen independent of the issuer. And so, yeah, there's lots of cases where revocation is necessary.
Steve, I'm gonna finish it here because I know we've got another session planned another day. So I think in the future, let's get into talk a bit more about anon creds, a little bit more of the detail around privacy and how that works with SSI. Awesome. It's been great having you. I've got a sneaky suspicion that even our second session may lead to a third. But thanks for joining me. It's been a pleasure, and hopefully everybody who's been watching has enjoyed an introduction to SSI and will tune in for the second episode.
Excellent, thank you. That was a lot of fun.